Hi, and welcome to part 3 of Williams Mullen's series on mezzanine lending. And today we're going to be looking at why mezzanine loans are attractive to lenders. And straight out the box, the answer to that is the rate of return that many lenders get on these loans. Generally, the market has sustained returns of 12 to 15%, depending on the types of assets and the state of the market, of course. But that extremely attractive rate of return has become a real inducement for a lot of people who were not traditional lenders in this market to get involved. And it's also in recent years been the attraction of that rate of return in markets where it's sometimes been exceedingly difficult to find transactions, that if you can't find your own transaction, you can always become a mezzanine lender and lend to another firm which has found some transaction. And in that way, you are leveraging the amounts you have available or that investors have provided to you in order to earn a very attractive rate of return for yourself and those investors on that money. Randal, why don't you address the next reason why lenders like these loans?
All right, thanks, Bob. So another good reason is that there's this perception that there's little risk attached to mezzanine loans, particularly where in markets where property values are rising and the economy is doing well. There is this expectation that the tenant or operator risk is minimal, and that the income from the property will be sufficient to cover both loans. And that is especially the case with residential assets like apartments. Another attractive feature to lenders is that the mezzanine loan market is not heavily regulated, and therefore there are just low barriers to entry. So private equity firms, venture capitalists, and really any other investors with sufficient cash can be mezzanine lenders. So it's not just limited to traditional banks. And mezzanine loans provide a good option, as you said, Bob, for lenders or investors to generate returns without having to go out and find deals or to comply with fairly significant regulatory burdens that they would face in a senior mortgage lending market. So those are my two reasons.
Okay. And the perception that the mezzanine loan has little risk is that in connection with mezzanine loans, there are a number of remedies that the lender has available to them if the asset runs into a problem or the borrower starts to experience problems. There are certain tools that the lender has that will solve those issues. For one thing, a mezzanine lender generally has the right to cure defaults occurring under the senior loan. So if the lender on the mezzanine loan sees that the borrower on the mortgage loan is unable to pay for insurance or taxes, and that may cause a default that would then cause the senior lender to go and foreclose against the real estate, which is obviously problematic for the mezzanine lender, because if the senior lender sells that real estate and doesn't sell it for an amount sufficient to repay the mezzanine loan, the lender is really left high and dry. So that right to cure defaults and make payments on behalf of the mortgage borrower is extremely important for the mezzanine lender. It can make sure that there is no type of default that may result in the collateral for the senior loan being sold and it being left unpaid. There is also the right generally to buy the senior loan at par. So again, if the senior loan runs into problems, the senior lender is threatening to sell the building which secures the loan and which the mezzanine loan is dependent upon, the mezzanine lender can come in and say, that's fine, I will buy your loan as well, senior lender, and that way I'm in control of my own destiny. I can decide when and if the collateral that is securing both of our loans essentially is going to be sold, what time that will occur, and how much money I will look to earn in connection with that type of foreclosure sale. So again, extremely important remedy. The third remedy that the mezz lender has is the remedy provided by the Uniform Commercial Code. Again, the collateral for the mezzanine loan is the pledge of the membership interest in that mortgage borrower. The mezzanine lender can take that collateral, go out into the marketplace, and sell those membership interests. Again, that senior borrower controls the building. So a potential purchaser can look at that and say, wow, if I buy these membership interests of the mortgage borrower, I will control that particular piece of real estate. So it's a useful remedy to have. The other remedy that the mezzanine borrower has is the ability to sell the loan outright to another lender. It can decide, I've made a loan, there's some problem or some issue that I don't like, or even if there's no issue that has occurred, a mezzanine lender can decide, I've been in this investment long enough, the value of the collateral has gone up, I've made a nice rate of return at my 12 to 15%. I'm simply going to go out and sell my loan to lender X and allow them to buy that loan and now own it, and I have exited and been repaid everything that I'm due plus made a nice return. Randall, what are another couple of remedies that mezzanine lender has?
Well, I think another big remedy that we should touch on is the right of the mezzanine lender to repay to the repayment of its loan amounts in a situation where cash is being trapped by the senior lender. So by way of background, in certain scenarios under the senior loan, such as an event of default under the senior loan agreement, sometimes even an event of default under the mezzanine loan agreement, or if there's been a violation of the debt service coverage ratio, then the senior lender has the right to trap all of the income from the property into an account that's controlled by the senior lender. And then the senior lender can disperse those amounts in accordance with a cash waterfall provision that's spelled out in the senior loan agreement, which typically includes payment to the mezzanine lender of its monthly debt service payments, but may also include other amounts depending on the negotiations between the senior lender and the mezzanine lender. So I think that's another good remedy for the mezzanine lender.
Right. And finally, one of the reasons that people are interested in making mezzanine loans is sometimes it's a position that certain lenders can take in anticipation of trying to acquire the property for itself. I mean, it may sound a little predatory, but certain lenders will take the view that if I make a mezzanine loan on a property and some problem happens down the road, with all of the remedies that we have described, that lender can very well leverage itself into a situation where it may ultimately own all of the debt secured on that building, or through certain remedies that are available under the Uniform Commercial Code, it may be able to acquire ownership of the membership interests in the senior borrower. And in that way, it ends up not just as a lender, but as the actual owner of the asset itself. So that has been attractive to a lot of lenders who, again, in markets where it's very tough to find good transactions going on, if you become a lender, it can be viewed as a stepping stone to the ability to acquire those assets when you couldn't acquire it directly first time around. That concludes part 3 of our series. In part 4, we'll be looking at the types of problems and issues that arise for borrowers that make mezzanine loans quite difficult. We hope you'll be able to join us for that part. Thank you.